In a significant stride towards modernizing its financial infrastructure, the Securities and Exchange Commission of Nigeria has announced the transition of the equities market settlement cycle from T+3 to T+2, effective November 28, 2025. This change implies that transactions executed on the stock exchange will now be settled 2 business days after the trade date. Joining us to analyze now, we have Mr. Tajuddin Ibrahim, who's the Director of Research and Strategy at Chapel Hill Denham. Great to have you on the show, sir.
Thank you for having me on the show today.
Right. So I guess, some investors will be looking for maybe T or maybe T+1 at this point, but I guess it's T+2 now. That's an improvement, at this point. Talk to me about how this shifts, in settlement cycle will impact trading and investment strategies.
So the shift is going to positively impact investment strategy and also trading when we look at the development from those two perspectives. The one thing to bear in mind is that the decision is going to make the market a lot more efficient, and it is also going to result in an increase in trading activity and investment activity by investors across the world. Because, and I say across the world because we are not only looking at how it will impact Nigerian investors, it will also going to positively impact foreign investors that trade in the Nigerian market, because effectively what it implies is that we are moving to where the UK market is currently in terms of settlement. We settle T+2 from November onward. That is where the UK market is also. So T+2, that makes us relatively more competitive from the previous settlement cycle of T+3. So in summary, it is a positive development.
All right, so do you think investors need to make, any kind of change at this point to their, current portfolio or trading practices, to adapt, to this new cycle?
So what I think is going to happen is that, investors would have to be ready, to ensure that their cash is really made available for investment. Because when you want to buy stocks, it means that you have to make cash available for settlement a day earlier than previously. Previously, it would be like T+3, but now going into T+2, it means that if you want to buy stocks, you have to make your cash available, a day earlier, and it implies that you really have to plan your liquidity in that regard. And I think that is one thing that has to materialize. A lot of education has to also happen with the regulator and also the capital market operators educating retail investors in this regard, because that one day difference is material in my view. So it is one major thing that investors should expect to do. The second thing that I think is going to happen is, if we are talking about the sell leg of the transaction, you will get your cash faster. It means the cash conversion cycle is now shorter for investors, which is a major positive development.
So what would you say are the major potential benefits or risks associated with this transition for individual investors?
Well, I'm not sure there's any major risk, in this context, but what I believe has to happen is everyone is updated in line with the expectations, and everyone is better prepared, to make cash available one day earlier in terms of settling their trade. Number two is that everyone also has to ensure the availability of securities in their CSCS account a day earlier, than we had it, previously. So the risk, in this regard possibly is around, making cash available one day before versus the previous setting. The second is ensuring that securities are available a day earlier versus the previous arrangement. I think those are the two key areas for consideration.
All right, let's look at it from the brokers and dealers' perspective now. What specific system or process upgrades are required to comply with this T+2 settlement cycle?
So not so much of system upgrade possibly is required, but what is required is sensitization around this development, and what is also required is the fact that the settling banks for the traders and the dealers have to also be aware that the settlement cycle has been shortened, by 1 day, and that implies that transactions should go, 1 day earlier compared to the previous, cycle. And I think also dealers and traders, are now able to, watch their liquidity management more efficiently because, it is now down by 1 day. Previously, they had up to like 3 days to manage any form of liquidity that arises from investors taking position in the market, but now that has reduced to 2 days, and it implies that they really have to work around being more efficient around managing liquidity for just 2 days instead of 3 days previously.
And how do you think this will drive investor sentiment, really? Do you think it'll be more on the sell side or buy side?
So let me put it in this perspective, right? If I buy a stock on Monday, it will settle for me to get value on Thursday under the current arrangement of T+3. But for a T+2 arrangement, it means if I buy on Monday, I can get value, for what I buy on Wednesday. So what that implies is that I'm able to plan to see what else do I want to buy on Thursday. That is number one. Number two is that if I were to sell any instrument in the market right now on Monday, I will be getting my money into my account on Thursday, which is fine. But under a T+2 arrangement, I will sell on Monday and get value, get my money into my account on Wednesday, which means I am a lot more encouraged to buy additional stocks in the market. It should encourage more trades. It should encourage more investment in the market. It should encourage more participation in the capital markets because the cash conversion cycle is now a lot shorter compared to what it used to be previously.
And do you think it will encourage the youth to participate more in the market?
I think yes, because the youth, as we all know, are always in a hurry to get their cash. They are always in a hurry to get things done. They really want things to happen very quickly. And if the capital market is adopting a strategy that will make things happen more rapidly versus previously, I think it is something that the youth would like. And I think over time, the youth possibly will also be looking for a T+1 settlement. That is where the UK market is migrating to in October 2027. So we are matching the UK market as we speak, going to T+2 settlement, but they will leave us in 2 years' time to go to a T+1. And I think it is something that we should also be looking for to ensure that more youths are encouraged to invest in the capital market. The faster we are able to get our cash, the more we are interested in the capital market investment opportunities, in my view.
Right. I guess we'll see who makes it there first. If Nigeria can make it to T+1 before the UK, but definitely we're following their lead, from what I'm seeing so far. Thank you so much, Mr. Tajuddin Ibrahim, is the Director of Research and Strategy at Chapel Hill Denham. Thank you for coming on today.
Thank you for having me on the show.